What's going on, guys? It's Ricky with Technical Solutions. Hope that you guys are all having an amazing day. So thank you guys again for all those that are tuning in live. I want to quickly cover three patterns. I'm going to try to make this video kind of straight to the point. Three patterns that I've been focusing on that have assisted me in staying green. So if you guys have watched my last 3 days of videos, I've talked about how you can still stay green in a bear market. It doesn't mean 100% that this is a bear market. This is me just talking about, the Dow Jones, the S&P 500, all major markets have been pulling back. So how is it that you can stay green and still make money in this market? I'm going to showcase how it is that what has led to my success. This isn't, it doesn't mean that you should do exactly what it is that I do, or none of these stocks that I'm going to be talking about in any way are any stock suggestions. So just like when we cover within our group of Technical Solutions, we have 3 rules within our group that I would really like you guys to focus on. You never trade based on other people's opinion. You never invest in stocks or ETFs that you don't understand, or anything that you don't understand. And you always have a form of risk management, understanding where it is that you're buying, selling, and cutting your losses. What's going on, JD? How you doing? So I want to thank you guys all for tuning in. I know my hair's like freaking crazy right now. So I do apologize for that, but let's go ahead and focus on the 3 patterns. I just wanted to make sure that we started off on a green note. It's been a great week. If you're part of the Learn Plan Profit Group, you would have seen that today I did not take any positions for day trade positions, or did not enter any new swing trade positions. And the reason why is I'm going to explain to you exactly why I didn't, and what it is that I'm waiting for before I take another position. So there's actually a message that one of our members within our group said, that one of the best trades that you can take is not take one at all, for the day. Because if nothing is going according to your plan, or you don't see value, or the margin of profit isn't necessarily worth it, so the opportunity cost, then why take the trade, right? Why risk it? Why even invest or take the risk for the heck of it? So be a smart trader, trade smart, and make sure that you only trade what it is that you see value in. So whatever, you're adorable. Oh my goodness, there's a freaking cat. Wait, take him away, take him away. Ah! Oh my god. Oh, that is embarrassing. I don't even want to see how many people are going to laugh at that. Wow, that is hilarious. All right. I hate you, Chris. Oh. Hopefully that didn't go through. So let's see what everyone is saying. No, they're just laughing. Okay, let's go ahead and jump right to it. So let's go ahead and talk about the pattern. So the first pattern that I've been focusing on is I've been trading ETFs, or stocks that have actively been trending up. So not focusing on when they're potentially going to reverse, but actually focus on stocks and ETFs that are actively trending up, not just intraday. Intraday doesn't mean anything big picture, right? So it's good for a day trade. So if you see something scalping up, then it's great for a potential day trade. But if you don't see long-term potential or long-term growth, or that overall pattern, you don't really see it happening, then why is it that you're going in for a potential swing trade, especially for a hold? So what is something, let me just show you an example, that's been actively trending up and been showing signs of consistent growth. So JDST, I've covered it time after time, and you might be saying, well, Ricky, what the heck? You keep bringing up the same stocks and ETFs every single day. Ask me how much JDST is up today. 7.29%. Guess how much it was up yesterday? It was green yesterday. It was green the day before. Why do I have to be trading new stocks or new ETFs every single day? If I see and I'm investing in something that's actively trending up, then I can day trade it, take my positions, or swing trade it, whatever I see value in, or whatever it is that I feel the most comfortable in, then I will take those positions, because it makes sense to me as an investor. I'm not here to please you. You're not here to please me. We're here to grow our accounts, and let's make sure that we stay true to that. So with this overall understanding that, it showed signs of a reversal at $45, it started actively trending up. The reason that I did not take a position on JDST today was because of this pattern. There is a previous support level, so normally where it bounces at $60. If you guys remember, my original plan was to trade this one from $55 to $60, and from $50 to $55, so those $5 margins. Now, let me go ahead and get a little bit closer. During market open, I saw that there was again a resistance right around $60 to $59. So because of that, it was too close to the resistance. The pullback wasn't necessarily enough for me to see, hey, I might want to enter for a swing trade position here at around $58.50, because the margin of profit to $60 was about 2 to 3%, so 2.68%. But I have to ask myself, hey, JDST offers intraday, so I could have treated this as a day trade, offers intraday 2.68% potential for profit, but the support level is at $55. So if I do the math there, that, the potential for loss is much greater there. So I could always manage my risk at 1 or 2%, but in big picture, understanding that margin, the potential for profit is much less than the potential for loss. Much less than the potential for loss. Therefore, it's not worth the risk for me. Now, the thing that I really liked that I asked right now before I went live, for the people that are part of our private group, the Learn Plan Profit group, and the main TechBot Solutions free networking group, how many people actually took a position on JDST? And the reason that I asked that was because it actually made new highs, and that's actually a pattern that we've been focusing on. This ETF that has been actively been trending up on the 180-day chart above the EMA, broke its resistance at $59, and that's when I knew that it was going to be a good day trade. The reason why was because of all the negative connotation right now that the market has, being a bear market, these gold-based ETFs end up doing exceptionally well. Not just JDST, but DUST as well. So I want to congratulate all those that were able to take action and saw value in what it is that they were investing in. I didn't take a position on these ETFs today, but we had people within our private group that took action because they understood how to identify these patterns. And that's exactly what I want each and every single one of you to be able to do. Not just to plan out your trade and hope for the best, but to identify a pattern, understand the potential for profit, the potential for loss, manage your risk, and take action according to what it is that you see value, because you miss 100% of the shots that you don't take. So understanding that, what is it that you are doing to actually grow your account on a consistent basis, but ensure that you are investing in something that you actually understand. So I just wanted to quickly cover this 180-day analysis, 180-day chart pattern that's actively trending up above the EMA and continues to make new highs. Why would I want to trade the inverse ETF? So answer this to me. Why would I want to trade the inverse ETF, NUGT, as it's trending down? I can tell you 100% why people would want to buy right now, and it's because it's at its previous support at $25. Do you see that previous support? It's a known support level. So yes, it could potentially be a good buy. But if you could see that it continues to make new lows and there's no confirmation of a reversal, there's no reversal pattern, what, is giving you the understanding that this is a good investment right now? Why would you want to add to your position or invest in something that's continuously trending down? Yes, it's at a known support level, but it's not showing any signs of a reversal. So the first pattern that I want you guys to understand is something that's actively trending up, showing signs of a consistent uptrend like DUST and JDST. And although they are approaching resistance levels, just manage your risk. Focus on stocks and ETFs that are actively trending up, manage your risk, and for any form of reversal or any form of indication that there's going to be a pullback, then make sure that you have the proper plan set up that's going to allow you to be able to manage risk, keep your losses small, and ensure that your profits are much greater. So like DUST right now, it's up 8.35 or 3%, 8.3%. So that's an amazing growth, right? The next resistance is going to be about $28. So there's actually a member. Actually, no, I want to give you a shout out. So it's Barry. Barry messaged me yesterday. So he's been one that I've been speaking to on a daily or other day basis. And one of the stocks that or ETFs that he was trading was DUST, and he called out the resistance at $28. I called out the resistance at $25.26 because of previous previous patterns. But once it breaks that resistance, that becomes a new support, and then it showcases its new resistance. So because of all this negative connotation that's going on with the market, if this continues, you will see ETFs such as DUST, you will see ETFs such as JDST to continue to excel as every other market pulls back. And it's because these ETFs tend to do better when in a bear market or when there's some form of negative connotation within our overall market. So I just wanted to make sure that you guys understood that pattern. There is also something that I wanted you guys to make sense of, and it's when there's an actual confirmation of a reversal. There's Ford. Ford is the one that is it? So Ford is showing signs of a potential reversal. I'm not too sure if you guys saw this today. It bounced at $10.10. It just broke above the 180-day chart. Let me make this, based on my experience, one green day does not mean a confirmation for a reversal. So just because there's one green day, that doesn't mean that Ford for the next 3 months is going to continue to trend up. It might be having a, just like there could be false pullbacks, there can be false, pushes. And if you see Ford right now and how it's trending, you're like, okay, this is looking really good. But because it's pushed up 5% today, which is exceptional for a multi-billion-dollar company, it can pull back. There will most likely be pullbacks. So let's be patient. Let's make sure that we have a full-on confirmation. And one of the patterns that I would really like to focus on, especially with something like Ford, is for it to actually be riding this EMA line. So, not just push above it, but for it to pull back and validate that EMA line, showing signs of a continuous uptrend. So I think that would be a really good pattern to really keep your close to keep a close eye on. Now, there was one pattern. Let me zoom out all the way that I really wanted to focus on. I don't know if you guys. So I want to give a shout out. There's a couple members within our group. We talked about it in our Sunday Stock Talk when someone asked me to break it down. It was XXII. Ferris brought it up again within our main group chat link, or main group chat, and it was the previous resistance or previous support when it had the pullback was at $2.50. It was a previous resistance level. It validated that as a support, and now it's approaching $3. Is it a good time to buy XXII right now at $2.90? This is my opinion. In no way is this any stock suggestion. I would say no. And the reason why is because $3 is a resistance level. You can see that it's still actively holding below the EMA, but if we do get a break above $3, then that means that it broke above the resistance. And if we see consolidation and a confirmation that it's going to hold above $3, then we can trade. Again, the margin of profit that I first identified was from $2.50 to $3. It's too close to $3 because it's at $2.90 that the 10-cent margin of potential profit isn't worth the potential pullback that it might experience. But if it breaks above $3 and starts to continue to trend up, now all this margin that it has to offer, because now it's in a different margin of potential profit, is much greater, which would make much more sense on why I would want to invest in it then. So there has to be a break of resistance, which is going to be at $3 for me to see value in XXII. So what does that mean that I have to do? Well, I set my alert at $3, so I'm alerted when XXII breaks that $3 resistance, so I can revisit the stock, do my technical analysis, formulate a plan, and see if this is still a stock that I potentially want to invest in. Now, let me go ahead and, come on. Which one was it? No, it wasn't this one. I apologize, guys. Let's see. DSLV. Boom, boom, boom. Okay, so there's a series of stocks that are showing signs of a potential reversal. I think I can actually pull it up right here. Nope. So, boom. These are actually trying to push back up again. So, Netflix and all these. So, it looks like. Yeah, the S-Dow is actually pulling back, so that means that Dow Jones and all the other major markets are actually pushing back up. And again, one green day does not mean that it's gonna, all recover. So just take that into consideration. Really understand and look at the patterns, big picture, not just intraday. So let's see. So one of the patterns that I wanted to focus on is to get like a full confirmation that something is actively trending up. I'm not too sure what stock or ETF it was. I can't actually pull it up. But it was one that was continuously being rejected by the 180-day EMA. And it's one that we talked about in the Learn Plan Profit group today. I really do apologize. I thought I had it pulled up. I'm going to try to see if it pulls up here. But this is actually, this is a pretty good example. So this wasn't the one that I was thinking about, but it's something that pulls back drastically, starts to show signs of a potential reversal, but this EMA line is still acting as a resistance. We can see that there's a lot of consolidation happening. It's showing signs of a bear flag pattern, so something that's actively trending down towards a support level. And there might be a potential break. So we might see a lot of consolidation at $8, and there might either be a break of support or a pop, and it's going to start actively trending up above the 180-day EMA. So as all these markets are pulling back, the reason that I wanted to talk about why this pattern might be very important is something like Ford. Something like Ford is, no question, way on the oversold side, showing signs of a potential good buy. And understanding that, we want to make sure that we get a full-on confirmation that this thing is going to actively start trending up. I'm not going to touch Ford until it breaks above $11. And it's because, just because it has one green day doesn't mean anything to me. I want to make sure that it really starts breaking resistance levels. That's more of a confirmation to me than an actual just break above the EMA. So once it starts breaking resistance levels, and we can see that it's actively trending up, then it would make much more sense to me on why Ford or these other major markets are going to start actively trending up. So yeah, just wanted to quickly cover some of the patterns that I've been focusing on that have assisted me in staying green within the past couple of days. I hope that this video was fun or somewhat informative, and if it was, if you guys want to give the video a thumbs up, giving me a better understanding that you guys like these videos, that would be great. So, okay, so someone's asking me to break down Gush. Let's see. I sold DGAS, buying more if it bounces, sold DGAS. Okay, I like that. DSLM is moving up. Okay, let's talk about those. So, okay, let's go ahead and break down those. What's going on, Isaiah? Okay, sounds good. So let's go ahead and break those down. So a couple people are asking me to break down a series of ETFs. I'd be more than happy to. So, and then we'll end the live stream there. And I have something that I'm going to announce at the very end, so just give me like 3 minutes. It shouldn't take very long. So let's go ahead and talk about Gush. So I think I already did. Gush is the inverse ETF of DRIP. So Gush is actively trending down, but it's showing signs of a potential reversal, but it's still holding way below the EMA line. So still showing signs of a downward pattern. I would set your alerts for when this one actually starts trending above, starts breaking resistance levels like $25, $26, or $27, because even then it still has a lot of margin to recover. You want to make sure that you're not just getting in something when, let me give you an example. Gush right now is pushing up. It's showing signs of a potential reversal. Let's follow up with this one tomorrow, and the reason why is because right now it's showing signs of a potential uptrend pattern. Let's say we get in right now. It's pushed up already 4.7% on the day, which it hasn't done within the past like 2 weeks. So if we get in right now and then all of a sudden there's another pullback tomorrow and it continues to trend down, we bought at the very peak of that false push. So that's why I don't like getting in when something is pushing up. I like to wait for the break of the resistance or the break of the 180-day EMA for it to push up, pull back, bounce off the 180-day EMA, and then continue that uptrend pattern. Again, it's about getting in at a good buy. So the inverse ETF of this is the inverse ETF of DRIP. DRIP experienced a pullback today. This makes much more sense to me on why this would be a good buy, and the reason why is because this thing is actively trending up. Yes, it pulled back today, but that means that I can get it for a sale, for a deal. And it makes much more sense for me. I can see that the support level right here is going to be, or the EMA line, is going to be right around $13. So let's say I get in at around like, $13.58. I cut losses at the break of $13. That's actually a pretty steep stop loss. So yeah, that wouldn't work out very well. So, maybe we just have to be a little bit more patient with this one because the resistance level that it has is right around $16. So let's calculate what the potential for profit is. From $13.69, the resistance being at $16, the potential for profit is about 17.46%. The potential for loss as of now is 4%. So that's a pretty high profit for, a high loss as well. So that's attractive for some people. So just wanted to, bring that up. So DWT, if I'm not mistaken, that was it. Okay, so I personally don't like this one. This one has been brought to my attention before. The reason why it's been showing signs of a continuous downtrend. I see why it is that you are probably bringing it up, and it's because it's showing signs of a potential reversal. Set your alert right here at $12. The reason why is this thing has continuously been held below the EMA line on the 180-day chart, and when it does start to reverse, it cannot really hold and break above resistance levels. Example, when it broke above 17, yes, it went above 17, almost hit highs of 18, and then continued to pull back down. So think about it. Resistance at $12, current price at $11.60, 40-cent margin of profit in comparison to a continuous downward pattern. It just doesn't make sense to me on why I would invest in that one when there's so much more opportunity elsewhere that's actively trending up that offers much greater potential for profit. So yeah, thank you for asking about that one. I like the pattern and the breakdown, and I see why it is that you called it out. I just don't like that specific ticker. So Reagan, of course. So people are talking about DGAS. DGAS definitely did pull back today, and it's expected. It's been having nonstop green days. I would say that the pullback where I would think DGAS would be a potential good buy would be around $25. Also take into consideration that it did hit above $28 today, and $28 was a very common resistance on the 180-day chart, and then the next resistance is $30, and then the one after that is $32 to $33. So understand that it's still actively trending up. These pullbacks are inevitable. They're always going to happen, but it's about knowing where it's going to be bouncing. So what I like to do is potentially looking at it intraday. It looks like there's going to be, I'm in California, which is 1 hour behind Arizona, which means it's 1:47. So there's about 13 minutes until the market opens. So right now, This one's still showing signs of a downward pattern. How do I know that? This is the VWAP indicator. We can see that it's trending below the golden VWAP and the middle VWAP, showing signs of a descending pattern. That's not something that I want to invest in. I'd rather be patient and wait for tomorrow and see if there's any sign of a reversal. One of the things about DES is that it does do a lot of movement during pre-market or aftermarket hours. So, if you're willing to be that risky, then that's a potential thing to look into. But yeah, that's not something I'm comfortable investing in, just because I'm a little bit more of a conservative trader. So that was fun. I hope this live stream wasn't too long. Where are we at? Oh man, 20 minutes. So thank you guys again so much for your time. One of the things that I wanted to let you guys know is that I talked about it yesterday in my video. And because I've been trading ETFs so often, in the course for Learn, Plan, Profit, which is the first link in the description, that's the group that I speak to and work with on a daily basis. I don't have an ETF section, but I've been trading it so often. So what is it that I'm going to do is this week, I'm going to dedicate my entire week and develop an ETF section for that for the course itself. And I'm going to provide you all the tools and resources that I've utilized that have assisted me in my success, so I can be independently a successful swing trader when it comes down to trading these ETFs and day trading as well. So I just wanted to call that out for all those that really like trading these ETF patterns, how it is that I find them, how it is that I break them down, what resources I use to be able to correlate the futures that go into comparison to those corresponding ETFs. I'm going to provide you guys all that data in the Learn, Plan, Profit course. And we did launch the beta trials for the new application that we're going to be launching. And I think we might already be filled. I'm not too sure. But again, it's the first link in the description. If you click the first link, dedicate 1 minute of your life if you haven't already, just to simply learn about what it is that I offer. And we offer a free group also. So if you're not in the position where you can do that, then 100%. We have 80,000 members within TechBot Solutions. Click the third link in the description. I believe that's it. And you can join our free networking group. And then we have a private group chat for that as well. And you are more than welcome. You get to speak to everyone within that group. So we have a bunch of different tools and resources that you guys can utilize that we have here to guide you in the right direction. So there's no reason that 2018 can't be your best year ever. So thank you guys again so much for your time. Continue working hard, continue following your dreams, let your passion be what drives in your success. And if you guys aren't subscribed already, we'd really appreciate it. We have a little bit over 100K subscribers. And if you guys haven't liked this video, we'd really appreciate that. So thank you guys again so much for your time. Continue working hard, continue following your dreams, let your passion be what drives in your success. And like always, let's make sure that we end the year on a green note. Take it easy.